All right. Good morning, everybody. Short week. So keep that in mind with the options trades that you take. It's always a really good idea to be mindful of these short weeks if you're doing anything mechanical, right? The kind of options trades where we put on iron condors or 0-day flies or anything that is considered a mechanical trade. The function and the play, the premiums, the outcome when it comes to short days, short weeks, even, it's inherently a bad idea. So something to consider, right? I've done a lot of work on mechanical trading systems, and they don't do well in these environments. It's always through the holidays too, right? We're going to do this through Thanksgiving, and then we'll have it right at the end of the year. Looking at the markets this morning, everybody seems really happy with the Yellen replacement. That was the last hurdle we had to get through after NVIDIA. So the pick seems to be a person that everybody can get behind. He's known on Wall Street, and it doesn't look like there'll be too much of an issue getting him confirmed. The markets are happy about that, and we're seeing it. So we're on track for a Santa Claus rally into the end of the year. And at this point, the only question is it going to be an everything rally, or are we going to default back into like the Mag 7 only kind of rally? Looking at what's going on, we have the Dow up the most within the US and small caps right behind that. And if you have looked over what's been happening since the election at things like the Dow Jones, just amazing, or the New York Stock Exchange itself. I know we don't really cover, the NYSE on a day-to-day basis, but it shouldn't be overlooked, right? Just because we hit the indexes, the S&P, NASDAQ, you do want to look at things like the Dow, the NYSE. China's still down, but basically flat. I mean, it's not getting destroyed. Looking at the data today, it's really going to be a lot of Europe. We'll let them reload. So you can see Bank of England, European Central Bank. We got some auctions on the 2-year. Ignore these timelines. These are for my own local time. Check the FX Street or use your broker's internal economic calendar. TradingView's got one, Thinkorswim, IBKR, Fidelity. Just about every broker out there has these. So we got European Central Bank at 11:30. Really close front end auctions at 11:30 and 1 o'clock. You could probably use something like the IRX for these since they're so close to the front end. And then the 2-year, I mean, to me, this is one worth watching, but these auctions in general, they're worth watching. All right, so I mentioned the Janet Yellen replacement. Markets really seem to like that, and the Europe move. If you check out everything else that we have coming in this morning, matches what we've already covered. We got auctions on the docket, some ECB. Kind of a slow day. Shouldn't see anything really derail this move. And we are mostly focused on trying to gauge what kind of move this is going to be. Is it all going to be, Mag 7, semiconductors, the whole AI craze, or is it going to be a little bit of everything? We did get that drop back in the dollar. 108 seems to be the line in the sand. If we get above that, it's likely the markets are going to react to that. Otherwise, holding the line at these highs and or even better, pulling back from these highs wouldn't be such a bad thing. I think the markets would respond positively to either one of those. It'd be better to see a fall, honestly, but just keeping the line, not getting above that 108. If you look at the ES and the NASDAQ, the ES and the NASDAQ are both above the 10. So that puts us in a bullish bias. And the VIX is continuing to fade out, break down. So we tag that call wall in the overnight. That's the level that we have to get through. While you're watching today on the prices, just keep your eye on any options tool that you have, whether it's Trading Ticks, Spot Gamma, Whale Stream, whatever you got, to see if that call wall gets rolled out. If we can get up through it, if you don't have one of those tools, if we can get through this level and keep it, then they've rolled it, right? That's just a simple metric to use. It's not guaranteed. We could come in tomorrow, find ourselves above that line, and still see the call wall there. But all things considered, if we get above that call wall and keep it, expectation would be that they're rolling it. We are a long ways off from everything else that you can see. 3-week moving average, ADR, volatility trigger, 10-day, 20-day, zero gamma, 10-week, foot wall. Everything is so far below us. We're above everything. The only thing that we have over our head is the call wall, today's ADR, and those previous highs from the election week and the next week where we just kind of wicked up a little bit before we fell. $60.40 is a level of concern I would pay particular attention to. Yeah. All right. For last week's VWAP, we left it behind. For the month's VWAP, same thing. It's a long ways off. Today's VWAP is the start of the new week VWAP. So we'll keep it into tomorrow, and then tomorrow we'll have, a new one. Anchored VWAP. If we continue to run, then we're just going to keep leaving it in the dust. It's not going to keep up. It won't be helpful unless we retrace. Central pivot range. Today's range is completely outside of yesterday's range. That puts us in a bullish bias. Price opened above it. That also puts us in a bullish bias. The channel's a little wide, which implies if we attempt to break out from our own Globex range that it's likely to fail. Just keep in mind that these channels don't make price do anything. It is worth noting that we haven't hit today's pivot point yet, and markets generally hit their pivot 80% of the time. So the fact that we haven't hit it doesn't mean that we're going to. It's not a destination that we're going to just fall down there and hit that pivot, but just play it level by level. If we break our own Globex low, then we're going to target the close of Friday. If we can get back inside of Friday's range at all, and we get underneath that close, then you know where we're going. So it's a short, just working its way down, right? If we fail the breakout against our own high here, shorting off the high to me is always better than shorting from the breakdown. So if we get a chance to reverse it off of the highs, I'd much rather get that. If we don't get back up there, we don't get a chance to short from the highs, or we get through our own high and keep going higher, then there is no short, right? But I'd much rather short from up top than short from the hole. Get inside this channel, get that channel closed, get the gap closed, maybe even get back to the floor pivot, all predicated on the idea that it's going to be a sideways day without a lot of flow, out a lot of news, and we've got a gap to close. If we maintain this bullish bias, bullish posture, we can stay in this range for the rest of the day, not do anything. We're already up 0.5%. Or we can break through our own Globex high, keep moving to the upside, and we just keep on moving to the upside, laying out the ADR levels. Measured move. We have the point of control from 2 weeks ago, 60.25. So a continued move to the upside, we're very likely going to hit that. That would be a level to focus on. And then 60.32 cog line would be another area of concern. So this whole thing is a high volume node, that whole zone. I wouldn't focus on just one specific price point inside it, but the point of control is the highest part of all of it. Otherwise, we've got a lot of structure underneath 6,000. The thing is, this gaps get closed. You know, statistically, that's just the way it goes. Whether we close it today or we close it later in the week, gaps close more than they don't, right? So if we do drop back down into Friday's range, say we get that gap closed, we can actually get stuck here in that high volume node. And then we would need some sort of data to get us out, some boost of flows, some trigger, something. On these short weeks, though, the lack of volume can actually be a part of the trigger that really makes the market move. Coming in a little light compared to what we were seeing last week, right? Even Friday at 115, and we're sitting at 67 in the overnight. 67 is not bad. It's just when you've been getting 115, 157, 164, 101, 67 comes in a little light. It's all right, though. We're expecting to see that number continue to drop as the week goes on due to the holidays. I wouldn't be surprised at all, you know, if we come in, say, Wednesday, and this thing is sitting in the 30s. That's just the way it is, right? We can see that they're not hedging. So we know that this low volume isn't because they're sitting out in concern, hedging up, waiting on something. That's not what happened. That's not what is happening. So we're good on that front. All right, we talked about the point of control getting moved from this high spot down here. It is there now. We're not going to lose any of these candles for a week at least, because here we are on Monday. Each new candle that we get on the right will take one away from the left. So we would need a whole week of candles to eradicate all of this, and then it would get us into these candles here. That's a long time from now. So the only thing that's going to move this point of control is if we sit in this one spot and we start building out volume here faster than we're losing it here, which would mean that we got to stay put in this one spot and not really move around. It's doable. It's one of the things I mentioned already, is that we could just hold this gap and chop right here all day. We don't have to do anything. We're already up 0.5%. It doesn't owe us anything else. But if we fade out of that and drop back down to close this gap, and then we get stuck, we could get stuck underneath 6,000 in this high volume node. and we could build that area out. That area doesn't have very much from back here. It's all from that high and that right there. So that very small amount of data has a whole lot of volume tied up into it. We can drop back down into that, bring that point of control up, say by Wednesday, and that would be a nice springboard higher off of that. Still got to see it play out though. All right, looking at the 5x5, we've got a really tight IB, initial balance. The TPO and the point of control both just got your classic D shape profile. We've left everything behind. It doesn't quite have the tail that we would want, but Friday was your classic P shape. Bullish surprise. That did give us a new VPOC. The one that we had was tagged Friday multiple times. We weren't able to get through it. We're just going to steal that line now since we've already hit it. It doesn't have any value to us anymore from its old location. We'll just use that line down here. $59.85. I mean, you can round it up, say $59.86. It isn't going to hurt anything. So if we get that gap closed, we're very likely going to also tag that VPOC. Then we'll get caught up in yesterday's profile. And by yesterday, I mean Friday. Speaking of Friday, we looked at this week's range on Friday. We just compared what we had with what it was offering on the new week, right? We don't need to really nerd out and get this thing exact. Just draw a line on the previous box on the previous week and then set it on this week. If this week lines are more narrow than last week's lines, then it shows us that this week has less volatility in it than last week. At first glance, that sounds good, right? Like, oh, yeah, there's really not a lot on the agenda. They're not pricing in a lot of volatility. Yeah, but if there's some big events that they're worried about, they'll price in a sideways market because that's what we do before a big event. FOMC, CPI, non-farm payrolls, those are volatility suppressing situations. I know, I get it. The first time I heard someone say that, I thought, what are you, stupid? FOMC is not volatility suppressing. The big move days, it's really violent, it's crazy. But if you think about it, they're exactly right. Before FOMC, we spend 1 or 2 days going sideways often. I mean, that's just kind of the thing, right? We sit around waiting on FOMC and the markets don't go anywhere. That's volatility suppression. Same thing with NVIDIA earnings, CPI, non-farm payrolls. We go sideways for a day and a half, 2 days into those events. So the lack of volatility this week doesn't necessarily mean that there's nothing on the table to be worried about. We are more than 0.75% above the 10-day moving average. We're on the swing back up, as we were talking about last week. It's a jagged curve, but the curve is there. So everything's fine. We're not overextended. We're not overbought. It doesn't owe us any sort of mean reversion, pullback, least squared methods. Nothing says that it owes us a move back in the other direction. Looking at the weekly, we're about 2.25, a little more. We have started to fade back just slightly, but that's fine. There's nothing wrong with this. We're not overbought. We're not overextended, and we're just working the wave. Sitting between 2 and 4 is good. That's a really good spot to be. It's like cruising down the interstate with your cruise control on, right? You've got the speed you want. You just want to kind of maintain it there. And as you go up and down the hills, maybe, speed drops a little, picks up a little, but you're just maintaining that consistent speed. You see the blue line tucked in there. When you really try to focus on it, it's just a smooth, steady rhythm. That's exactly what we want. We don't want it picking up too fast. Don't want it falling off too slow. Just holding the line. That's exactly what we want to see. Just a quick glance at what we've had over the last 5 days. These are risk on, midline, and risk off sectors. And I know it's a lot to look at. Just focus on the upper left part of every one of these screens, and you'll see that they're all blue. If they were orange, it would be in the negative. They're blue, then they're in the positive. All of our sectors are positive over the last 5 days. So if we're looking for that everything rally, well, I mean, we're kind of doing the thing. Everything is up over a 5-day period. Even something like healthcare, which took a pretty good beat down, is on its way back up. That's what you're going to want to watch for today if you're looking for some kind of breakout continuation in the indexes, the Qs, SPY, SPX, ES, NQ. If you want the markets to run, you really don't want to see more pressure on the Mag 7 to get it done, right? That trade is so crowded and it's so violent. We need the rest of the market to pick up some slack. A couple of ways to do that, depending on who your broker is. On Thinkorswim, you have the Visualize tab. So just do it in levels. Your upper tab is Market Watch. Your next tab is Visualize. Then change that heat map and pick index. Now you can pick any index you want, including a particular watch list. If you want to, you could just put the Mag 7 in there or something. But these are detachable, and you can put pre-made indexes like the NASDAQ 100 in it. So you could put that in, detach it, load another one like S&P. You can shrink these down into just little bite-sized nuggets so they barely take up any space at all. This is an advanced decline line. So it's going to tell you how many names in the S&P 100 are up and how many are down. But it's also going to tell you the money flow, how much money is coming in on those names that are up versus how much money is going out on the names that are down. So you have two different metrics. You'll be able to look for bullish and bearish divergence. You'll be able to keep track of the S&P, the NASDAQ, the Russell, the Dow, as many indexes as you care to watch. Look and see if we're going to get that rally based on an everything rally or just on chips and semiconductors and AI, Mag 7, same old. All right, VIX is down, gold miners, Bitcoin, all down. China a little bit weak. It's not down as bad as we would have expected. It's just a little weak. We're still not ready for the China play yet. Looking at what's up, you got nat gas, chips, bonds, banks. I mean, it's spread out really nice. Mag 7, cloud, another index for the Mag 7, airlines getting a little bit of mean reversion. Retail, building materials, technology. It's a very diverse, bullish morning. It's a really good start to the week. Looking at what is up, based on the sectors is fine. It kind of gives you a broad outline of what groups and industries are making moves. But when we say everything's up, well, then, I mean, that's not very helpful, right? So we want to narrow that down a little bit, get into some specific names and see perhaps something in that data that can highlight an opportunity. If this will load, there it goes. Got a little scared, didn't it? Wow, it's a laggy. They just did their Black Friday sales event, by the way. If you have been thinking about using TradingView, getting it 70% off is about as good as it gets. So I just ran a screen looking at names in the S&P 100 that are up at least 0.5%. And we have 45% of the S&P 100 up more than 0.5%. That's a lot. That's not as bullish as the most bullish I've ever seen, but it's still a really good number. 45% of the S&P is up more than 0.5% today. You don't want to stand in front of this. Don't try to catch a falling knife. Don't short any of these things that are breaking out into new highs. And that's just a really good tip anyways, right? Never short new highs. Never try to buy new lows. Swing trading, right? Not intraday trading. The groups, though, if we try breaking it down a little bit by groups, looking for something that really starts to stand out. There's our semiconductors down here. Broadcom, Qualcomm, Texas Instruments, AMD. Notice those chip names that we see here. It's not ARM, NVIDIA. It's a different chunk of the semiconductor space. But we do have some Mag 7 names in there, like Apple. I could see that one. Tesla, PayPal, although I don't think we consider PayPal a Mag 7 anymore. Amazon, Google. So we do have the big dogs in there also. All right, looking at the NASDAQ 100, how many names are up at least 0.5%? 55. Again, that's not the most bullish that I've ever seen, but that's pretty bullish. So while we could just quit going higher and fade back to close the gap in the indexes, right now, this is looking like a broad everything market rally. We've got things up in just about any category we would want to see. There's ARM showing up in this one, SMCI. You know, it looks like I didn't get a chance over the weekend to see about their compliance issues, but I thought they found a new auditor and then they would just need to fill out the paperwork or complete the paperwork to keep their listing in the NASDAQ. They're still here Monday, so I'm going to assume that they managed to do that, right? We've even got some of those food names back up again that we had lost, like ketchup. So this is really diverse. It's spread out really nice, which is good. You know, we're not just looking at something resting on the back of the Mag 7. And I liked that we saw finance up. Is it's the 3-tiered system, right? Consumer discretionary, financials, and technology. Those are the 3 risk-on sectors that we really want to have. And if that rising tide lifts all the other sectors, then even better. So it's looking really good this morning. Keep your eye on that kind of market breadth, that perspective of what is everything doing. This doesn't quite meet my alpha protocol, so we're not there yet. But there is a trade strategy or a trade concept, just like the algos do. If the algo can trade a basket of stocks, why can't you? Right? So it's something to think about. If you look at the S&P 100 and you've got 95, 96 names all moving up, that's 96 out of 100. You can buy your whole basket of stocks, right? It will say calls and everything that's on your list. That's the Alpha Protocol. I think I ran it 3 times this year, so it doesn't come around very often when you get, 97, 98, 99 names all doing the same thing. If you don't have such a protocol, consider building one. It looks good, guys. Watch the clock. Keep your eye on those auctions today. Otherwise, market breadth should be your friend. It should show up in the options chain, in the options flows. And I will see you all tomorrow.